So, a good afternoon and a warm welcome to the earnings call of the Iute Group AS, following the publication of the full year figures of 2025. I am delighted to welcome the company's CEO, Tarmo Sild, and CFO, Christel Kurwitz, who will guide us through the presentation in a moment, followed by a Q&A session via audio line and chat. And with that, I hand over to you, Tarmo.
Thank you. We had indeed very good year. And before going into the annual results, let me start by giving you the context of what we have been building here for past 6 years. I think the context is very good to help us to understand how well we have progressed and what to expect from the future. And in the context, there are two keywords. Number one is value proposition. Value proposition to our customers, value proposition to our partners. Value proposition no longer consists of a single product like a loan, installment loan, but it consists of many different goodies which people can bundle, assemble, use as they please. The second keyword besides value proposition is automatization, digitalization, and progress there using AI, using data science. And putting all this together makes us closer in our transformation towards fully digital bank with the most used super app. So proceeding with the context, I think most important, let's start from how we have created the capabilities and how we have obtained licenses during the past years. So at the bottom layer, you see that we have been issuing bonds since actually earlier than 2020. We started with 2018. And based on the bonds, the finance that we acquired through bonds, we have built the credit business, the simple consumer lending business consisting of installment loans in all countries where we operate. On top of it, we started adding wallet. We could conditionally put the start year into 2020. And the wallet consisting of issuing the cards, later doing Iute's own ATMs, cash ATMs, later adding different licenses, electronic money institution licenses, first in Albania, then in Bulgaria, then in Macedonia, and in parallel we also acquired a bank in Moldova, and we continue on this journey. Then we have also started issuing or intermediating insurance certificates and constantly increasing the value proposition to customers, what to insure, when to insure, how to insure, in which countries to insure, to the point where we also set up Iute Affinity Company in January 2026. Then we also started issuing to customers deposits through acquisition of the bank. And we also started business lending through acquisition of the bank. And with all this, you see it's a combination of having the licenses, but also building the business capabilities. Business capability meaning you have the team, we have the business process, we have the technology, and we are constantly building, so that on the customer side, customer looking front, we see a chocolate box from which to pick whatever customer likes. And this, of course, needless to say, costs money. Let's look at different dimensions of the digital bank or the chocolate box. So one dimension through the past 6 years is the ecosystem we have been building. Ecosystem which consists of partners and partners who have active points of sales. And you see that if 6 years ago we had slightly more than 1,000 active points of sales, then by end of last year we had 3,500 and increasing. You also see that the amount of lending activity has been increasing. Last year we reached the 117 million euro mark. I think in future we will be reporting the gross merchandise value because the partner ecosystem is not only for lending, but for transacting. And there are different types of transactions, different types of purchases that our customers would like to do with our partners. And we have also certain ability to guide our customers' preferences and bring information, relevant information into their notice, because we have more than 270,000 active customers and even larger pool of customers who don't use our service today, but who have onboarded in the past. Another dimension is wallet. You see that the wallet revenue grew There was a jump in 2022 when we acquired the bank, and since then it has been more or less stable, somewhere just below 9 million euros per year, whereas the number of customers who are using wallet for different purposes is going up. This is very important for us because we consider wallet as a clue product. We charge for it, but more important is that customers transact. Customers transact with our partners, they transact between themselves, and also they generate a lot of information which is usable for making business decisions, for making customer-obsessed products, and expanding the ecosystem. With insurance intermediation, we see on top of the customer growth, which started only in 2020, our first full year was 2022. On top of the customer growth, we see also the revenue growth. And the revenue growth is increasing in pace in relation to the past year. And this year, well, actually, I'm not allowed to say what we are aiming. I will only say that we are aiming a total revenue of 2026 nearing 150 million euros, total revenue of Iute Group, including the insurance intermediation. But in 2025, we hit almost 6 million euros, and it is growing very fast because we are adding different insurance products to our portfolio, which we can then intermediate to our customers. We print the digital insurance certificate or insurance policy. We charge the insurance premium from the customer, pass it over to the insurance company, and eventually there is also a fee sharing arrangement. You see also that the share of insurance in the total revenue pool is growing, and last year on its own, it almost reached 5% of the group's total revenue. Going to the more traditional part, we see that there is a long-term trend. The trend is to have more bankable customers and also issue more bankable loans. So you see there are two curves which are crossing each other. The black curve is the APR curve, where 6 years ago, the group issued loans in the APR range between 50 to 60, and end of 2025, the APR of financial company loans issued by the group, so I'm not talking about the bank, but financial companies of the group, we issued loans at the APR around 33. On the other hand, we see that the total revenue from loans is increasing, meaning that we can increase the exposure, and larger loans for longer maturities with better managed credit risk actually yield more and better, and also enable us to accommodate more capital from investors, from depositors, and build larger loan portfolios. So we see that the loan revenue has been increasing on a par with decreasing yields, whereas the yields decline eventually will stop, but the loan revenue continues to grow. Digitalization also can be displayed as a correlation between the share of automated loans and our operating expenses to revenue ratio. Automated loans, of course, is only one aspect of digitalization. We just chose one. I chose the share of automated loans. Fully automated loan means that there is no human involvement. It's only the customer who says whether he or she wants a certain funding, certain financing for a certain period, and we make a decision, disperse the loan, and the money is available for customer. So you see that there is correlation. Of course, OPEX revenue ratio is hard to change because OPEX revenue displayed here shows not only the OPEX of lending activity, but also OPEX related to insurance products, to wallet, and every other business initiative that we have incorporated into group to build the chocolate box, to build the value proposition. But we still see that in the long run, there is a drop in OPEX revenue ratio. There was increase in 21, 22. That was also related to great extent when we acquired the bank, a legacy institution which had very low operational efficiency. But we see that we have been successfully pushing the OPEX revenue ratio down, whereas the share of automated loans is going up. On the right side, we also look at the revenue per employee, and revenue per employee, we see that has been a stable ratio of 150,000 euros per team member. Obviously, the more automatization, the more digitalization there is, the more the revenue per employee should increase. we see there is a drop, and that drop falls to the period when the group suddenly acquired the bank together with more than 400 employees. So basically, we doubled our group headcount. And you see that after the sudden drop, that is again climbing back. So my message is we are successfully incorporating the bank, integrating the bank into group's business purpose, into group's mindset, and into the digitalization mindset. And that's the last one on the context. There has been question about interest coverage ratio and whether the group's profitability is sufficient to maintain the covenants given to the bondholders. And I would address this question by displaying very simple picture showing that the future building investments, the investments that the group makes on an annual basis, either into geographical expansion or into creating the expanded chocolate box, or in deploying more artificial intelligence, all this comes at a cost. And on an annual basis, we pay more than 8 million euros. We spend more than 8 million euros on things which are related to future, building the future, on things which are not needed to carry on the business as it is today. To carry on the lending as it is, together with bonds and maybe with some slight improvements and keeping it compliant and keeping the lights on, we have a layer of activities which cost significant amount of money, which we do in order to build the future and to build the digital bank with most used super app. So I could also illustrate it by showing the HQ team size, Iute Group headquarter team size, which has been increased by acquiring more and more talent who bring us the things who move the needle for the future. And to illustrate the point in numbers, I believe that last year in 2025, we could have also ended up the year with annual profit exceeding 18 million euros had we not made the future related expenses and investments. Not all of them are accounted in the balance sheet as hard assets. They are just accounted as expense. When we recruit people, we pay them salary and we expect them to create value to move the needle in the future with what they create. So this is about the context where we should look the annual results of 2025. And we have been profitable. We have been profitable at a stable net profit margin of 8%, which is good enough for us to keep growing and keep developing the future. We made a net profit of close to 10 million euros. We gained more customers. We built larger portfolio. We built larger balance sheet. We exceeded our balance sheet target of 500 million euros. We increased the revenue by 10%. We improved the OPEX to revenue ratio. And we also have achieved this in spite of the declining yields in loan portfolio. So looking back to last year, we have been successful in building the value proposition for our customers and growing the business. As we see, the loan portfolio gross grew to 377 million euros. We issued in fourth quarter 125 million euros. Actually, what is worth noting in the context of, to put into perspective, the outstanding bond issue of 47 million euros, we have to redeem in October 2026, 47 million euros. Crystal, correct?
Confirmed.
In December 2025, we dispersed to our customers, in 1 month alone, we dispersed our customers 50 million euros. So the lending activity is really increasing at a good pace, and we also see that the quality of the assets is improving at a good pace. We see it in the share of non-performing loans. We also share it in the impairment to interest income ratio, and we also see it in the overall cost of risk ratio, which showed another improvement during 2025. We can also see it in the daily ongoing basis when we look at the customer performance index, the ratio of actual repayments versus expected repayments from customers according to loan agreement, and we see improvement there as well. This all is achieved thanks to very good work of the team and using the data science tools, including artificial intelligence. A fact statement, we have in the group deployed 14 different models, and we have different AI agents. Another interesting fact, perhaps, we assessed during 2025 close to 1 million calls with our customers, meaning automatized translation of the voice into the text, and then also assessing the content and taking action based on that content. Well, on the CPI, what I can only add is that if we take the long-term portfolio, then the CPI has improved by almost 2 percentage points from 86.8 to 88.3. And if we take the most recent loans, which we have issued during last year only, then the recent payout CPI is 96, which is already, I think, on a normal bank's level, except that the loans our bank still are yielding higher than our own bank does. Our bank Finco loans are yielding APR 33 and bank loans are yielding 11% APR. I think, Kristel, I have spent all the time you gave to me, so it's your turn.
Yes, thank you, Tarmo, and good afternoon from my side as well. Let me make one comment. Yes, as of today, we are presenting unaudited figures, but we already know that tomorrow audit opinion will be issued. So in that regard, no changes. All the financial numbers, all KPIs are actually already audited ones. And from that point of view, yes, I would like to thank the whole team, especially finance team. Without the huge effort from the finance team, we couldn't manage. So just a short overview regarding financial KPIs as well. As Tarmo already said, total revenue up by 10.6%. At the Finco side, total income up by 11%, and at Enerbank side up by 6%. And as already explained, still main revenue stream loans, but 69% during 25 was increase of insurance revenue. And as already said, first of all, with new insurance products, we established Iute Affinity. We definitely believe that insurance revenues will grow rapidly during 26 as well. And of course, we launched Iute Pay Bulgaria in January 26, and with our plan to launch Iute Pay Macedonia during the second half of 26, we truly believe that we will see also a growth of wallet revenues during 26. Adjusted EBITDA on a yearly basis up by 13.6%. We ended up with 54.2 million euros. And as well, main reasons behind higher level of revenues from both entities or both sides, from Finco side and from Enerbank side. We managed to keep operational costs under control, and due to the improved quality of loan portfolio, allowances increased only by 3%. But at the same time, net loan portfolio on yearly basis increased by more than 20%. Net profit already explained by Tarmo, close to 10 million euros, despite the higher funding costs, as also already said, and net profit margin 8%. OPEX to revenue ratio on consolidated basis 34.9%. Yes, there is still improvement to be handled at Enerbank side. As at Finco side, we managed to keep OPEX to revenue ratio at the level of 32%, but annual basis at Enerbank side at the level of 53.4%. Capitalization ratio dropped by 10% from 25 to 22.5. And as already said, our net loan portfolio increased by more than 20%, but at the same time, equity increased by 8%. Leverage ratio on consolidated basis at 6.3, but also I would like to point out slight improvement compare end of third quarter. And also that at Finco side, the leverage ratio at the level of 5.4. Interest coverage ratio, as already said, 1.5. But also one comment that compare end of third quarter when we had the interest coverage ratio 1.5. Now at the end of December, it was 1.53. So we can already see slight improvement. So regarding total revenues, as already basically said, revenues up by close to 11%. Still 86% are produced by loan portfolio, followed by wallet and insurance. So I believe we can move further. Net interest income. As I said, on consolidated basis, net interest income up by 4%, and exactly the same result for Enerbank and also for Finco. Despite the fact that yes, interest income on a yearly basis increased by 10.3%, but at the same time, interest expenses or funding costs increased by 35%. Of course, at Finco side, we also recognized one-time expense cost related to refinance exercise we handled in June 2025. As you see at Finco side, net interest margin from 28 to 24, but I am glad that risk-adjusted net interest margin from 15 to 11.5, once again confirming that there is improvement of the quality of the loan portfolio. So, our operating expenses. As you can see, I believe it is historical moment that you can see from the graph on the left side that at Enerbank side, operational expenses from 10 million euros to 7.3 million euros. So definitely we will see improvement of efficiency at Enerbank side, especially with all our IT development and digitalization, and also at Iute non-bank side. Despite the increase of team size, etc., we managed to increase operational expenses only by 4%. So OPEX to revenue ratio already covered, but still ongoing process how to be more efficient at Enerbank side. And as said, yes, our aim is during 2026, latest 27, to see OPEX to revenue ratio at Enerbank side at the level of 50%. Adjusted EBITDA, basically already covered. As you see from the graph on the right side, biggest impact to adjusted EBITDA comes from increase of revenues, just a slight increase from impairments, and also slight increase of operational expenses. And yes, to sum it up, so as Tarmo said, we closed year 25 with balance sheet of close to 511 million euros. Close to 81 million belongs to equity, and 83% of total assets belongs to net loan portfolio and cash. At the end of 25, we had interest-bearing liabilities in amount of 413 million euros. And roughly speaking, 45% are covered by bonds, and pretty much the same percentage are covered by deposits and loans. A small portion belongs to B2B platforms. Interest coverage is already said, and also once again to point out that yes, during the last quarter of 25, we already are able to confirm slight improvement regarding interest coverage ratio as well. And yes, as you all know, at the beginning of October, we will have remaining 26 bond to be redeemed in amount of 47 million. We have already initiated the refinance exercise, but as of today, we are not able to give any specific scenario or steps, but definitely we will keep you informed. Thank you. That's all from my side as well, and maybe we will move on with your questions, please.
Yes, thank you very much, Tarmo. Thank you, Crystal, for the presentation. And we now move on to the Q&A session, dear participants. So please use the raise your hand button so I can unmute you, or you can use the Q&A chat box. And we already received some questions. I will read the first one out for you. Could you share your view on what you expect for RPRs on group level for this year? Could we see some stabilization now, or is it the trend still downwards?
I'll take that one. We are looking at stabilization. As they say in finance, the past performance is not indicator or promise of the future. So indeed, if you look at the APR evolution during the past 6 years, you will think that it is a linear trend downwards towards the zero. I think that in 2026, the APR of Fincos will be around 30% APR. We can take the next question. Do we have voice connection?
Yes, I guess so. The question from Mr. Shamaiman was the second question. What drove the -2 million FX loss in Q4?
Moldovan ladies.
Yes, sorry, we were already discussing between us. Yes, sorry. It is related to Moldovan lei during last quarter of 2025.
Okay, and Mr. Ballon has a question. When and at which level do you see the peak in the leverage ratio?
So basically, as I said, at the Fincos side, leverage ratio at the level of 5.4. Yes, that has been increased compared end of 24, when at Fincos side leverage ratio was 4.5. Definitely, we will not see a rapid move or improvement, but with efficiency. As you see that we were able to present better efficiency during the last quarter 25. With better efficiency, we will definitely improve or in parallel also leverage ratio. I don't want to give any specific date that as of end of June 26 leverage ratio will be 5.9, but we will working on it. And definitely it will improve with total improvement of efficiency.
Okay, thank you very much. And before we move on with the questions in the chat box. We have one participant, Mr. Dietmar Schwer. You should be able to speak now and unmute yourself. Mr. Schwer, you should be able to unmute yourself and place your question. So unfortunately, then we move on to another question from our Q&A chat box. And Emma Otmani just asked, hello, can you explain how do you intend to improve the interest coverage ratio going forward? It looks tight.
Interest coverage ratio means the covenant, and the question is, do we intend to lift the foot from the accelerator pedal in building the future and making the future-related investments? And the answer to it is twofold, because interest coverage ratio is actually driven by two numbers. One is the revenue, and we are certainly a revenue-driven company. And if the revenues don't follow through, in other words, if the customers don't pay our bills, then we have to deal with the cost side. And with the cost side, as I showed you, we had in 2025 leeway of more than 8 million euros, meaning that we decided to spend the money, invest for the future instead of not spending. And for 2026, the amount is even higher. So if the revenue doesn't follow up, then we cut the cost. And the cost is very dynamically manageable. We can do it within a quarter.
Okay, thank you very much for answering that. And we try and get back to Mr. Schwer. Mr. Schwer, you should be able to speak now. I just unmuted you.
Oh, thank you very much. Just can you give me an idea, what are your refining costs, the interest rate of your refining costs? I think the Eurobond is very expensive kind of refining. Are you just plan to reduce the part of the Eurobond costs and replace it by deposits or other kind of bonds, or is it a structure of refining that you will keep?
I think there are very many moving parts in your question, which you already addressed yourself. So again, let's start from interest coverage ratio. We are revenue driven. If we see that revenues are coming, then obviously we are also we have more leeway as regards the cost of funding. And on the other hand, we are also profit driven because we have also shareholders who want to see return on equity. On top of it, there is the investor community consisting of bondholders, but also local investors in the countries where we operate. We see there is a significant delta, significant margin between the interest charged by the investors who perhaps reside in European Union or who trade with Eurobond, and investors who place their trust into our local entities. So we talk about the gap between 3 to 4 percentage points. So obviously we have to assess all those moving parts when we make our call, but we will make our call during first half of 2026.
Okay. And the second question would be, are there any regulatory restrictions concerning interest rates in the countries you operate? Are there any caps that you have to consider?
There are regulatory restrictions in every country where we operate. They are tight and they are complied with very strictly.
Okay, thank you. Thank you.
Well, thank you very much. And we move on to some questions in our chat box. I'll read it out. Volodymyr Premiak asked, you recently got a full banking license in Ukraine, non-EU, which will require to adopt to a strict local regulation. How do you suppose to evolve to it? Just scaling your actual business model technology-wise, or to build something new for the Ukrainian market?
The answer is a mix. It's a combination. We certainly have certain technologies and certain know-how which we want to deploy everywhere. But there is also local regulations and local integrations which will be unwise just to throw away and not to deploy. So together with a breach bank, we also acquired the core bank technologies, which we think are usable, can be deployed also for our bank in Ukraine. So the answer to your question is a mix. We use different resources to maximum possible extent. We want to scale our know-how, but also there are localizations which have to be taken into account. Having said that, Ukraine, I think, is the most digital market of all of our markets. So perhaps for us, there is even more to learn from Ukraine than for Ukraine to learn from us.
Thank you very much. And we get back to Mr. Schmeiman in our Q&A chat box. Could you give an update on the restructuring of Enek Bank? Is the bank ready for organization perspective to push lending volumes?
The bank has been pushing lending volumes through 2025, which you can see if you drill deeper into the bank's balance sheet and loan portfolio size. You also see that the bank's revenues are increasing. To reiterate the point which I already made, that we are revenue-driven company. So the bank has been pushing. I would not say that the reorganization is complete, especially as regards to business processes and especially as regards digital onboarding. Because of all of our countries, all of our group subsidiaries, Enek Bank is the only one where we still haven't deployed the digital onboarding for our customers. And that is a peculiarity of Moldovan market, where, to my best knowledge, there is only one bank, state-owned bank today, which can onboard customers digitally.
Okay, thank you very much. And to the participants, if you have any questions, just use the Q&A chat box or raise your hand. We move on to the, by now, last question, also from Mr. Schmeiman. Q4 depreciation expense was quite elevated. What was the reason for that?
Yes, it is a reason behind it that only once per year at the end of third quarter, we are always evaluating what are the IT products went live during last 12 months, and then we will recognize as intangible assets, and we will start amortization. And that's why always amortization during the last quarter is higher compared to previous quarters.
Okay, thank you very much. And by now, I wait for a few more moments. We did not receive any further questions. I'll wait again for some moments. But if anything is clear and everything is answered, we therefore come to the end of today's earnings call. Thank you very much to all the participants for your interest in the Iute Group AS. A big thank you to you, Tarmo and Kristel, for the presentation and your time you took to answer the questions. Should any further questions appear after the call, please feel free to contact Investor Relations or the bank Iute Group as well. I wish you all a successful day, and handing over to you, Tarmo and Kristel, for some final remarks as you wish.
I think final remark, most important, is to say thank you. Thanks to investors for your trust, for your placement. Thanks to our teams in every country and in headquarters for building the future and delivering the results of the past 2025. We look forward to continue building the chocolate box for our customers who continue paying for it. Thank you very much, and see you next time.
Thank you. See you.